Lars, after being an entrepreneur, I hear with Cinco Capital, you are now yourself going a little bit into the space of investing or continuing what you have been doing more as a hobby. Tell us a little bit about what's next in your life, what are the next steps, and what are you going to do to keep yourself busy?
So it's not Cinco. Cinco is just my tax optimization private vehicle in Germany. It's called capital gain tax in Germany, which is literally 1.5%. So and this company is 8 years old. So 2 weeks ago, definitely, I thank God that it's not my private vehicle. No, what's on my mind? I started 2 months ago a new company, which is not yet public, which is going to be lots of fun again. Will be released on Twitter, and maybe start to Twitter.
Is it an internet company?
I don't know yet. No. 2 weeks ago, when we struck the deal with Boda, we had over 300 articles all over the place, and I didn't give a single comment to journalists, but I would say in over 40% of all the media sites and articles were a statement from me, which I did on Twitter. This definitely shows this kind of importance of this kind of short 140 characters service, and for entrepreneurs and just getting messages out, this is definitely a great platform, and definitely the platform where I launch my next company.
Tom, tell us from an entrepreneur's perspective, clearly when you look at the deals you're doing at Index, the size of the investments, you could technically find 500 different organizations writing checks like that. But what I hear is that most of the entrepreneurs, they wish to get funding from Index Ventures. Why do you think this is? What are you really doing different to others? Is it your relationships with strategics? Is it the synergies in the portfolio, if there is any? Is it the experience you bring? Is it the people? Is it the branding? Is it a combination of all? Why do you think you are so successful in investing in young rising internet companies?
Thank you, Marco, for asking. It's a great opportunity. I believe it comes back to the question we addressed before, which is what a VC can bring to a company. I should say, some people say you have to be lucky. We are nice people. I believe it's not really the point. The real point is, if you think about, we want to think that we bring value in a lot of areas, but at the end of the day, only few really matter. The few that matter, I believe, is about where networks help. It's about people. If you want to build a successful company, you have to attract great talents to your company. And attracting great talents, I believe, is extremely difficult. I remember back to my Calcu days, we're probably at the time 40 million in revenue, nice profit. I can tell you to hire a great country manager in the UK was extremely difficult. And unless you have great investors with a great network, it will remain very, very hard. So I believe this is one aspect people see in the help we can bring. I believe it's about the help coming from when you're running a company, you're pretty alone as a CEO, probably Oleg will subscribe to that. And we shouldn't think about we can help people, but it's like more sounding board. A lot of time when you have to make decisions, you want people who have some experience and can help you make some decision. We don't make decision on behalf of people. We help make decision. And the last point is, which the two are related. One is you probably need, internet is a good example. Making business on your own without partnership is very difficult. You have to partner with a lot of great names in the industry. So you need people to help you open doors. It doesn't mean that you cannot do it by yourself, but you may save 6 months, a year, or 2 years by getting the right network. And by the way, these people who are going to help you grow your company are probably also the one who will buy your company over time. So probably when you bring the right people on board, it's this kind of thing you expect to find, and it seems we've been able to provide it in the past.
Thank you very much. Oleg, tell us, Your deal experience with Fotolia and your startup activity before, what kind of tips, there are a lot of entrepreneurs having young startup firms sitting here in the room, what kind of lessons learned, tips you can pass on to the next generation of successful internet entrepreneurs?
Yeah, it's a little bit difficult question. I guess first you need luck. I mean, because everything, you know, with that, and if you don't have luck, I mean, do something else.
Don't even start.
Yeah, don't even try to start. Yeah. Then personally, I mean, I never started a company with VC money. I always did it myself, and I mean, because when you have VC money, I mean, you tend to spend, you know, a lot of money, you know, and I prefer to build businesses with very clear, you know, business model that I understand, and with and you know, all the financials, I mean, are very clear, and in such a case, I mean, you can, you know, it's easier, you know, to control the thing over time because you didn't dilute the business at in the beginning, and so I'm personally completely against VC, and I don't speak about later stage. Huh? So for private equity, I think it's completely different because if you have a business that is growing very, very nicely, you know, but
in a way, you were already your own VC by taking the money from the first and start a new company.
Yeah, it's true. Yeah, but the first one, I mean, I didn't. Yeah, of course. But at start, I mean, I didn't have money at all. Huh? So this is first thing. But for private equity, it's completely different because if you have a company that is growing very nicely, I mean, you can still, you know, take out a little bit of the risk, but still, you know, continue playing and try, you know, something much bigger. So it's a different thing. And then, I mean, general advice is I wouldn't write a book. You know, I think it's a little bit complicated, but. Do something that for which you have passion, I mean, probably, and that you understand very well, you know, and that you can do by yourself somehow, that you have the plan, you know, and execution in your head, and after everything probably will come. I mean.
John, I have a question for you. Looking at the largest internet businesses in Europe, I'm just throwing in some names here, like Scout24, Von Privé. I wouldn't mention the ones who presented this morning. Why do you think some of these companies are not public yet? Because some of them have been already significantly in terms of size when the IPO market was very much open, when companies like Sing and others went public, like a Rightmove, a Céloger. Why do you think those companies decided to stay private? What are the key arguments you hear when you're trying to convince them to pull the trigger and go on a roadshow?
It's good question, and again, you know, it's highly company specific. I think first of all, one thing that we do need to keep in mind is that, you know, the capital markets have essentially been shut for the last 2 years for IPOs, and given the, call it, 6-month lead time, and probably sort of another 6 months for owners and boards to come to the conclusion that they actually want to kickstart an IPO, you know, it just takes time, and this, you know, the current window was shut, say, from mid 2007 to, you know, end 2009. I think that a number of companies, they just didn't feel that it was the right thing to do when the previous window was open, and which I mentioned closed in mid 2007. Because I think that, you know, you made a very good point in terms of an IPO. An IPO for sure for the entrepreneur shouldn't be thought of as an exit. You know, it might be an exit for a VC that holds a 10, 15, 20% stake. Even for private equity that might own 50 to 100% depending on the company, or 50 to, call it, 80-90% on a fully diluted basis, you know, it's just the first step. So I think that that's the key thing that entrepreneurs have been thinking about, knowing that, look, it's, if I go public, it's just the beginning of a journey. It's for sure not the end. And I think that it's absolutely the right thing to think about these things as well. But I think that's one of the reasons why I'm pretty hopeful that we're going to see great companies go public in Europe over the next few years. And you know, just commenting on the US versus Europe debate, there's obviously a number of companies that for a number of reasons you know, are going to go public in Europe, and wouldn't, you know, the case for going public in the US isn't necessarily as compelling. I think there are a number of things that need to fall in place for companies to have the luxury of considering both.
Talked a lot about companies listing in the US which are in Europe. Have you talked to US companies listing, sorry, we have talked a lot about European companies listing in the US. Have you talked about listing in Europe with some US companies? We just learned that Google has more revenues in Europe than in the US. Would there be a demand for that?
Yeah, you know what? We've actually had a few discussions over the years, and I think that interestingly, back in 2004, 2005, there was actually a lot of interest, really as a result of Sarbanes-Oxley. You know, people were wondering, you know, why the hell should I get onto the public market? You know, can I really sort of survive in the straitjacket that regulatory bodies put on me? You know, we've had some interest, but obviously the U.S. tech market is incredibly deep. With you know, a lot of research coverage in a number of different sectors. So I think that you're definitely going to see more European companies looking at the States than vice versa.
Lars, what would you have done differently, if anything, over the last 3 years?
The IPO roadshow with you, Marco, was definitely a blast. We did the IPO with Deutsche Bank and formerly known as Lehman Brothers, and Lehman doesn't definitely pick better restaurants. No, just kidding. No, doing an IPO is really a hell of a ride. You speak to many investors, and let me give you, and this is also in answer to the previous question, like where to go public. When we talked to investors in Germany, everybody asked, because they were all members of Sing, what are the next features coming out? And this was really fun discussion, talking with people you actually using your product, your IPO every day. Then we moved to London, and many people, many know us, some didn't, but they quickly get the business model of Sing. Then we moved over to the US for the roadshow, and it was amazing. The quality of the questions was just 10 times better than anything in Europe. And we always thought like they're asking us what is on the next page. So this was definitely great. Then coming back to Europe, we stopped in Paris. And it was more the explanation, what is internet? We didn't get a single sign for shares from France. Maybe I was so pissed off that they didn't like me. No, I was kidding. And then we moved over to Switzerland. In Switzerland, the investors just asked us, like, okay, what about data protection, data privacy, etc. So I think within the roadshow we learned a lot about where are investors, where are smart investors, and yeah, definitely what a company actually gets out of the IPO is much more professional run. You are much more transparent. It is no more talking, I'm bigger than you or something like this. It is just about numbers, like the Delticom presentation. I really liked it. Germans are about numbers, getting things right. Americans are much better in marketing.
So Simon, listening to all this, what do you wish your colleagues at Bigoint? What do you think the best kind of roadmap going forward is, and what do you want them to focus on? Playfish obviously got a big call from Electronic Arts, which probably couldn't get refused. Where do you want to see Bigoint in the next 3 years?
We want to have a plan for be $1 billion business. We want to be as big as that. I mean, we really have a huge ambition. And I think I want to pick up on the last point, which is about explanation of what it is you do, and whether, you know, fortunately or unfortunately with Bigoint, we're in a space which is where the principal competitors are in Germany and China, which basically means that people in other countries don't really know what you do because they don't do it every day. And if they don't do it every day, their bosses don't do it every day. And if they can't explain to their boss what it is, they won't get the deal done. And in my experience, so much of it comes down to that, which is if your boss doesn't do it, then you know you're just going to get shot for recommending a thing like that. And so part of it, by the way, is just PR and presentation. And in a way, I hate that because it's not the business, is it? I mean, the business is the numbers and everything else. It's everything you just said. However, presenting ourselves, go back to one of my hobby horses, which is I think a lot of European companies, one of our weaknesses, we're not as great. You just said it. You know, the Americans are great at marketing. They present themselves fabulously. I mean, I've seen some truly amazing businesses presented from America, one of which the presentation was absolutely fantastic, and it went bust the following day. And it looked genius. I thought it was fantastic. And whereas we actually are generating some really good businesses, but not talking about it very well, and not explaining really what we do and why it's unique, and doing stuff like that. And I think we're certainly going to work a bit on that. But really, it's about creating a plan for having a really huge business, being very focused on, we don't suffer from the issue, but I think it's a big issue of what I call just stop using this word monetization. It's called sales. And as soon as you go to the word sales, it suddenly becomes incredibly real. It's like folding money, stuff you can spend. And I kind of like the word sales, because that means you've got targets and things. Monetization, it sounds like someone else's problem. And I think you have to be really focused on the practical details of building a business. And that's kind of what I do. And that's what we're doing with Bigoint, is building a really practical business that has customers, and it's focused on sales and product and all the traditional things that build a fabulous and big business. And I think that's why we can do it, because we've got the organization and the vision to go and do that.
So I guess it's a lot about execution. I want to open up the panel to the audience. Do you have any questions?
Thank you. Tim Merrill, IBIS Capital. A question for Dom and John. At the moment, the whole conveyor belt of money coming into funds, back out to portfolio companies, and then with exits across both VC and private equity spaces is maybe not broken, but it's not working the way it should. So, for example, I did a review of 900 funds across Europe and found 200 companies that look like good companies that by now should have exited but haven't. When do you think the VC and private equity space in Europe will get something back towards normal?
So it's back to the exit market we discussed earlier. I believe if you look at the potential buyers, companies have been obviously under pressure, so are probably more careful. But you have exit. Playfish was a good example. Why it was an exit? It's because it was extremely important to EA in terms of a strategy. So you tend in this kind of environment to concentrate on what is very strategic and not nice to have. The nice to have will come back because companies need to grow, companies need to find other opportunities, but nice to have come in better market environment. That's basically all.
Well, there will be a huge shakeout in the venture capital and private equity market. Probably 40% is what people say of the firms won't be raising new funds over the next 3 to 5 years. People say in the venture capital industry it takes 2 deals that each return half the fund for you to have a good fund. And so you need to really, if you've got a $300 million fund, you have to have 2 exits where your share of the company is worth $150 million. This is what you hear talking from the fund of funds guys. And that's hard. It takes a long time. And so for the venture guys to get new money, they've got to sell some of their companies. And you got to sell your best companies because you have to have your investors understand that you've got real value in these companies. And it takes a long time to get to the scale to where you can be a public company. The thing I've been impressed by, only having been in Europe for 2 years, is the quality of these businesses. They're very defensible businesses. There's less competition. In the US, if you have a good idea, there's 20 copycats immediately. You don't get that in Europe. And so you have, I think, more long-term sustainable mid-growth companies and fewer real rocket ships, although we saw some today. And private equity will be a better solution than the public markets for most of those top quality companies in those portfolios. That's just how we read it. And we've done a number of deals, 7 in Europe, where we've bought from other venture capitalists. And they're great companies, and we're proud to be the second owner of them.
For John, very quickly. So you said the US is more competitive. Do you see in Europe startups, as soon as there's a good idea, having more time to build their businesses in the US, i.e. do people like Oleg, Lars, have more time than US entrepreneurs to build up their businesses?
Oh, absolutely. I think the US is a bigger market with 300 million people than Germany with 70 million and UK with 50 or 60. But the US, you'll have 20 guys competing for that one space, funded by, there are 2,000 venture capital firms in the US, and tremendous numbers of angels who are all guys who are successful entrepreneurs, who are also venture capitalists in a way. Whereas in Europe, you can get a little bit more of a lead time, and you can build the business a little more thoughtfully, do better infrastructure. The market doesn't happen as fast. You know, there's companies like Spotify that may happen fast when they happen, but I think they do have more time and build sustainable businesses in a more thoughtful way, whereas US, it's all about getting on the hype flow and stealing the oxygen in the space, and people approach things very differently.
So the lesson learned is build your business in Europe and then try to IPO it in the US. So John, John, is that possible? Have you done a US IPO of a European company with a business hardly having any sales in the US?
You know, there are a number of companies that have actually gone
Asia.
down that route. From Asia. Did you say from Asia? Well, from Asia, but also from Europe. You know, a few companies going back some time in the semiconductor space. You know, NTL itself, you know, listed in, you know, NTL, I guess Virgin Media nowadays, you know, is listed in New York. So I think you have a number of examples. And as John pointed out, you know, a number of VCs and private equity guys, they actually tried to stop the corporate structure and infrastructure so that you can easily go public in the States. At the end of the day, as a European tech banker, I want to see companies go public in Europe as well as the States, American firm at the end of the day. And I think that it's, you know, with the right company, and especially if you're big enough, going back to John's point, I see no reason why you can't have a successful IPO exit in Europe. But you do need to sort of tick the box on a number of important points in terms of actually having a global business. I don't think that it makes sense to have a very local business, you know, focusing on one particular market in a certain region, and then going to the US to educate US investors about the specific issues that affect that particular region. I'm not sure if that's the right way, but if you have the right business, and you know, I think that, you know, you mentioned several businesses that in your portfolio that do have global characteristics, then for sure there's a case to be made that the US IPO should be considered.
Wondering if the panel could give us your views on investing in China and India.
Thank you.
We opened our Indian office, and we're going to make our second investment in India in the next 2 weeks. And I'm going to run back to the office to hopefully approve that investment. But we think India is tremendously exciting. But what works in India, it's not technology companies. They're just, it's really, it's communications, it's consumer products, it's retail, engineering firms, i.e. construction. These are the real big growth companies in those part of the world. I think China has seen some interesting internet companies, but you absolutely need to be on the ground. We're not smart enough to do that. I know Goldman Sachs has got a good business investing in China, where it seems like there's 1 or 2 or 3 superior venture capital firms, and then as businesses grow, they want to raise money from Goldman Sachs and Morgan Stanley on the private equity side. So I wouldn't encourage anybody to go invest in China. I think it's just very, very difficult unless you've got a real edge. And I'm trying to remember, I think it was Salman who told me that they've been in China for 30 years, and it took them 28, you know, before they saw profits out of it. It's a real long-term play to be successful there.
Okay, with that, we are going to have the next break. Thank you very much to the panel.